The bond and currency markets have opened after that two-day holiday. Maithili Bhushnarmat, consulting editor, ET now joins in on the show, as does Sanjay Shah, senior VP and fund manager fixed income at HSBC Global Asset Management. Maithili, we've discussed the monetary policy in great detail yesterday, but after speaking with all of our experts, what was the final consensus that you drew?
Well, I think the governor has taken a far more pragmatic approach now than he had initially, because he's realized that apart from very objective criteria in terms of the inflation rate, in terms of the real rate of interest, etc., and also the glide path that he talks, given the present scenario where there's so many unknowns, he needs to perhaps take a little bit more nuanced stand, wait and watch. So I think overall the policy shows a new kind of pragmatism on the part of the governor. It also shows a kind of uncertainties, and the fact that the Reserve Bank, even though it has held interest rates steady right now, it does anticipate that inflation could possibly kick off again, in which case the bank might have to do very much more. So I think overall, which is why this uncertainties does seem to be reflected in the bond markets in particular. As far as the rupee is concerned, it's a little surprising that it's strengthened, because he has taken measures to ensure that the short-term flows are discouraged a little bit. So it's overall, I would say, it's some pluses, some minuses, but overall I would think a very pragmatic policy.
Well, a pragmatic policy, so that's the word on the policy. What's happened today is that after 3 or 4 days, or a couple of holidays at least, the money markets have opened, and the rupees opened well, but the bond yields are a concern. Sanjay, for all the talk of money coming into both the equity and the bond markets, the yields or the bond prices are certainly not showing that. What do you make of the move? We are at some highs, 8.9% in today's session as well. That's quite a bit.
Yeah, so what has happened in bond market is basically the supply fears have started to take hold. Now we are seeing that April borrowing calendar has started to work now. So first auction is around the corner on Friday, and that is the fear that bond market is getting into right now, that there is a lot of supply, and if the demand is not adequate from PSU banks and so on, as we know that the deposit growth has not been that robust, it will be a concern for the bond market. So that's really the concern which is getting priced in now.
But Sanjay, the bond market the borrowing calendar doesn't really contain any surprises, because typically every year the first half does tend to raise about 60% of the government's borrowing for the entire year. So why have markets reacted? Is it that they're reacting to the calendar, or is it that they're reacting to the fact that RBI seems to suggest that interest rates might go up in future because they don't think inflation has been completely reined in as yet?
On the policy terms, I don't think there was also a great surprise either. There was a hawkish tone which was there in the last policy, which continued in this policy as well. The two events, because of the number of holidays in between, the two events that market is discounting right now is a little bit of the policy front. The other one is the calendar came in on 28th evening, which was not discounted by the market. Also that though there is this regular supply and that continues to happen, as of now bond market is looking to now absorb that supply. Earlier last 1.5 months we did not have any supply, so traders were taking position to make money. Now in fact there is a situation where a lot of traders are shorting on the government securities market and making money from the short side. So that's really what is happening. Absence of OMOs in the current monetary policy setup is also affecting these yields. If there is OMO, there is always a threat that some OMOs will come and people will be caught short on the government securities market. But now that fear is not there. It is amply clear that OMOs are not going to be there in the current monetary setup. So it's giving a field day for traders to short the market on government securities.
And do you agree with the governor that there will be greater monetary transmission if the RBI shifts to term repos rather than overnight repos? He seems to be very hopeful of that. What is your sense? Will it really aid transmission?
Yeah, it will help transmission. It will create more volatility on short-term rates. In fact, what is happening now is every day one has to predict what kind of flows, especially the banks, are going to get. And based on that, the overnight rates are going to be set up. Earlier, there was much more predictability that anyway the backstop is at 8%, so rates used to stay near that. Now the volatility will increase. banks will have to be more proactive about their liquidity management, and which will get translated eventually in terms of higher rates or rates, the monetary transmission that the governor is talking about. So there is a bit more longish path there, but yes, we are getting there. If term repos are order of the day, we will see that more transmission will happen.
You spoke earlier, Sanjay, about how everybody is trying to make a quick buck at the short end of the yield curve. But we just heard the governor also try to dissuade foreign investors from getting into the short end of the market as far as debt flows are concerned. How come the rupee is strengthening? How come there is still so much interest despite what we would call, these are after all like something akin to capital management tools? The governor never used that word, but clearly is suggestive of that. So what do you make about the strengthening of the rupee, the fact that there is so much interest at the short end despite the efforts to dissuade investors?
We have already seen in year to date, in last 3 months, about 23,000 crore kind of money coming in the short end of the curve. So governor is rightfully dissuading those investors who are just chasing the carry, because these are very short term kind of investors, and they may want to jump out at some point of time, which will create the currency volatility. So to avoid that or to control that, there is a move that governor has rightly done by stopping these investors to get into more T-bills and so on. So it is more of currency management that he is trying to do rather than dissuading investors just to go for the short end, for the FII side. The other one on the rupee point to be noted is on the equity market, there is still a lot of enthusiasm and still a lot of movement happening. So I suppose there is money coming in equity markets as well, which is by and large determining how rupee is behaving.
You spoke of the governor trying to do currency management, but despite that we are seeing the rupee strengthening day after day. So clearly the RBI is either not completely successful in its currency management, or maybe it does not wish to see too much of, it does not mind the appreciation. Which way do you think it is?
My take is that RBI is intervening at about 60 levels. They had intervened and they had collected some forex reserve. They would be doing more and more of that. I would not think that it will let it appreciate to about 58, 57 levels also. They would want to intervene at this point of time and create more reserves which can defend the currency going forward if at all there is some volatility. So that should be the way RBI would be going. Also, other point to note is that the liquidity management, liquidity generation for the system, as of now, they are not doing a lot of OMOs, they are not doing any other buybacks and so on. So they have to depend largely on the forex reserve collection for the liquidity management as well. So dual purpose are getting served, and RBI would be in some time, I suppose, would be intervening to control the volatility, and maybe 59 would be level where it should start to kind of aggressively do the intervention.
Sanjay, when it came to the domestic economy as well, the RBI wasn't too upbeat either. They spoke about fairly moderate growth, and they were also very concerned about the potential impact of El Nino on the agricultural output. How really should one read into this?
Every year we face this effect of monsoon and vagaries of monsoon, so to say. So that is going to continue. El Nino is an effect which affects actually monsoon and may affect the agriculture output and so on. So those are uncertainties that one has to deal with every year. This year as well is not different, and so RBI is rightly kind of doing this holding back of the upbeatness or the positiveness of the economy, because the monsoon is a bigger uncertainty that we face this time because of the El Nino effect.